Hello, 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 everyone. Mike Arnold here, co-founder, Path Trading Partners, along with the one, the only Bob Iacchino. If you want to see Bob, make sure you tune in on Tuesday, Thursday afternoon live stream and the occasional morning appearance. Where do we sit now? Looking at the sector overview, had a decent bounce in the markets. Remember. Earnings, big week of earnings coming up, especially there are lots of tech, lots of mega caps coming out. So if you're looking at sectors and doing drilling down, don't get caught off by your company. You might say, hey, this is a great thing to go into, and then earnings come out. Why am I bringing that up? Because earnings have dipped negative overall. So we're finally getting a pullback in earnings growth, not with every company, but there's a strong trend this earnings season so far, and earnings have already been dialed back. So yes, companies can still beat, but it's taking a much more substantial beat to really get a bullish move on. Now that may have changed, especially with the Friday's move going into everybody's bullish. Everybody's bullish going into the last quarter of the year, which I'll talk about this in the live stream, but it gives me a moment of pause when I think pretty much across the board, there's a couple of people I've talked to or who aren't as bullish as everybody else, but I'd say over 95% of all the people I talk to or interact with, it's a no-brainer trade. Whenever I hear a no-brainer trade, I do a pause. So just keep that in mind. Doesn't mean we can't rally. Okay, we're coming out of oversold conditions. The weekly cycles are headed up. All right, we're still in a long-term sell mode, medium to long-term sell mode. Nothing's changed with that, but you can get the counter trend technical rallies. Also, fourth quarter tends to be rally mode just overall. We have earnings this next week, but then we have stock buybacks. A lot of those companies have been on lockdowns, can't do buybacks. That's easing up for a lot of companies this Friday. So you could see underlying bid to the market from some buybacks. Once the election's out of the way and the November CPI, also remember you had the Tim Ross article saying the Fed's going to dial back their pace of hikes, possibly in December from 75 to 50. No surprise there. Talked about that with Bob on Friday afternoon. He was on that live stream, so if you want to watch that on replay. Why do I bring all this up? Because I am cautiously bullish. So that's even though we're in long-term sell for things like the S&P, NASDAQ, and everything else. Remember, the Dow has a short-term double bottom on the daily. Do remember that. If I jump over here, if I jump over here to the Dow futures, follow the futures. Why do I say that? Because the best patterns appear from all the testing I have done. It's better patterns in the futures. So we still have upside to about 31,971, so just shy of 3,200 in the Dow, so we could still see upward pressure. Now let's take a look at the sectors. XLE still in buy mode, never dip to sell mode, closing in back. Remember the probabilities. Return to 87.5, closing in on that. Also do remember Exxon, Chevron, and some other energy reporting at the end of the week. Southwestern Energy, just don't be blindsided towards the end of the week with energy earnings. We should still see continued upward pressure in earnings in this sector. And even with that pullback in oil, I'm not expecting a major collapse in earnings for energy, but just look at those individual stock patterns. So energy still is in bullish mode, and the key area of support on any pullback you see right around in here, not just as this is an emotional candle close, you had this area rejected from resistance over here, resistance, making a potential double top, turning into a triple top. Rally continues. This double top never triggered, but so that's actually confirming the resistance coming support. So on any pullback, 83.40 is my key area. Real estate, yes, long-term sell. Garbage in my mind. Any little rally, we don't have a potential double yet. It's got a lot of work to do. Not touching it. Just not touching it. Not worth getting in anything real estate related. XLF, financial sector. Let's take a look at some of these dailies. Financial, we got a lot of their earnings out of the way. Little pullback, move up. Going over into some key resistance right about this 30. I'm going to bump this down just a hair. Right about 32.89. So financial plays are still limited. Not great patterns. Unless I'm finding something really in financials that's outperformance mode. Maybe for a swing trade. But nothing major yet. Now, if the financials key, I'd rather miss out on a trade in financials than try to get in something that's just not going to produce very well. If financials does tip back to buy mode, then it will be a different story. Not there yet. XLK, though, technology, still in sell mode. I mean, that's not anything to talk about there, but decent rally. Remember, this was one I can be watching. We got a lot of tech companies. And why I'm keeping an eye on this, we still have this gap left behind. We still have the 50 overhead magnet, the 37.5% harmonic. So I am actually going to be looking more aggressively for some tech plays. Just be careful. Tech earnings. And unless it's a major beat, not looking for a ton upside. Now, unless there's a great pattern. You got Microsoft and Alphabet / Google Tuesday after the close. You got Meta Wednesday and Amazon, Apple, and Intel. I know Amazon is not technically a tech company, but it's a lot of people sort of play it like a tech company. So I'm just lumping that in there, even though it's a conglomerate. And they do have Amazon Web Services, which is their major money maker. So do not ignore that. But that's where, there's great patterns going in earnings. They can always be played, but just be aware from your stop perspective where that is. Now, since we did make a close above this little swing high on Tuesday, and this is the highest close back before the last sell-off that started in the beginning of October, so I'm really focused on some possible technology plays for a little bigger rally. We could easily return to the 50 to 62.5 harmonic area before the next rollover. XLI triggered on a weekly and a daily, this little double bottom pattern. So industrials definitely in play. Why? We have an upward catalyst. You can see here. Triggered, pull back, and then, back here, especially once we get that break above the 50. We could easily see more upside price action in industrials. This is one I will be heavily focused on, even on pullbacks. Daily cycles are at the top, but even on pullbacks, unless this double is invalidated, it is still a very potentially good play in industrials, from my opinion. Consumer discretionary, still very weak sauce, though this is not a double. And even if it gets above the swing high back from the 18th, we have a ton of resistance we're trading into. A ton of resistance. So, it's I'm just not super excited on consumer discretionary unless I find a very strong fourth quarter play. We'll get a little more bullish on it if it can get a close above this high from the 18th. But other than that, you're still a little ways off. So I will look if I find a stronger play. Other than that, nothing. XLP consumer staples. Pretty decent reversal up here. I am keeping an eye on a close above about 69.25. A close above 69.25, I'm starting to get much more bullish on consumer staples only in the short term. Yes, this was a little double bottom. That's confirmed but not triggered. Okay, I need a daily close, and I'm using conservative targets with this. We need a daily close above 69.27. We get that daily close, and I will be much more bullish on consumer staples. unless that pattern is stopped out. So watch tomorrow. You don't need even above these highs. You just need above 6927 on a daily closing basis. I will start scanning. If we get it Monday or Tuesday, I will start scanning aggressively for consumer staple plays. What's next? What's next? What's next? Healthcare. Healthcare. Remember, this is a valid double that is confirmed on the weekly and not triggered yet on the weekly or daily, because yes, you gapped up there to confirm it, but no close up there. Now, if we get a close above 127.55, looking more aggressively for healthcare plays. Where could that take us? Yes, we are technically in sell mode. We could trigger this pattern, which gives us a daily buy signal, and then that could flip into a longer term buy signal. So healthcare is definitely a sector that I will be focused on. We got the materials. Materials, even though it's in long-term sell mode, pretty bullish move last week. We do have a potential double, stalling out against the 50 on the Friday, but a daily close above 72.88. Material sector completely on the table for me. And you see we have a gap up here, a couple gaps up here. We could easily run this over the next few weeks back to the 200. So materials are in play for me. XLC, still in sell mode. What's interesting, this is still very oversold. I want to see how this holds up on the next pullback. We had AT&T earnings, Verizon earnings. If we can start sort of getting a move on above 50.75, I'm going to do another scan of some communication stocks to see if anything's interesting, but it's got to be a really strong setup. Yes, if we do a pullback, this is almost a sloppy inverse head and shoulders, but we need a bigger shoulder over here. This isn't a big enough shoulder. See, you want a more well-formed shoulder, like the left shoulder. Right shoulder just isn't well-formed yet. If we get a little more of a pause in here and form a better shoulder, I will then start looking at this from a stronger perspective. I will map this out, though, for everyone, just so people know if we get that. And, you know, if this does close, I still may watch these targets overhead, but it's just not the strongest formation. All right, so you'd need a close above the neckline, roughly 50. What's the key on this side? 50.76. Targets 52.94, 54, and 55.07, reversing this move. All right, it could stall out right at this 50, though, so do keep in mind if you're trying to play that. Just watch for that potential stall out there. XLU, remember, triggered to sell mode. Still in sell mode. Even if we get a bounce like we're getting in the notes, there's no double on this yet. It would slam right in the rotation zone and the breakdown zone. Just not interested in utility plays. XRT, we have the retail. What the way I said, the retail. Yes, the double confirmed, not triggered. Sitting on my hands unless I get a close. I need this to trigger not just above 60.87, but also a daily close above that 50. Then I will look for retail plays. That 50 coming in about 61, 60, let's just call it 61 area. So a close above 61 gets me interested in retail. Until that happens, no. Transportation. Hold on. I'm still taking off some of this stuff from last week. No, not a double. Blop, 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 blop. Transportation, unless we, yeah, that was a technical term. The blop, 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 blop. Unless I'm bumping up this level, because now we have a key point I will be watching for, a close above 209.50. Until that happens, nothing. Remember also UPS does report this week, and also watch UPS not just for earnings but for guidance, especially for guidance for the holiday season. I'm bringing that up just because I'm talking about transportation right now, and they're a major transportation stock. SMH, yes, even though we on the weekly basis we did close below 62.5. I am actually watching for short-term plays in this. Why? Why is the big question. Breakdown zone, I'm just going to bump this up. We closed above it technically, but now I'm just bumping this up to here because that's the rotation zone. We get a daily close above 187.27 or break through this with momentum into this clear path move. Gap left behind, 50 up here by the gap area. I will watch for some short-term semiconductor plays. That's for short-term only. Short-term only. Why? Longer term, we are in sell mode. Longer term, we should at least see a pullback to 151, if not 123. DBC, still in consolidation. This is commodities in consolidation, still in buy mode, not tip to sell mode. Key area I'm watching is, though, this 2350 area. There's really nothing to do from a commodity standpoint right now. Agriculture, still in consolidation, also technically in buy mode, but nothing I'm doing. Actually, I'm watching for this to potentially break down. So it's sitting on hands both in commodities and agriculture. Gold, interesting. You can see how interested I am by the number of times I said interesting. Little double bottom pattern triggered on Friday. Gold miners. Watching for continued follow through. Aggressively looking for any good gold plays. Why? We have some upside, and that could roll into a bigger potential double bottom. Now, gold is still in, or gold miners and gold, they're both in significant bear markets. But if this little double completes and then rolls up into a bigger double, it could be very interesting from a play standpoint. All right. Keep an eye, especially at this 25 level. You get a close above 25 on the daily. That's also an aggressive bullish signal, not only because it did complete this minor double, but we should then see a return to at least retest these peaks and then possibly trigger the double bottom. Gold, counter trend play, but I would not discount gold. Now, Vanguard value, triggering a double. Yes, this is valid. Triggering on the weekly. Yes, still in sell mode. But we have a weekly and a daily double. That sounds like a game show thing. 134.66, first target. So, guess what? Also, this closed above the 50 on the daily. There's no real great clear path, but you have up here between the 50 and 62 the first target. So, I'm bullish. Bullish on Vanguard value, bullish on any good value plays I can find. Now, remember, there are some what are constituted some value stocks coming up with earnings. You got to check to see if there's still value and if they have good patterns. But value is first and foremost on my radar screen. Growth, Vanguard growth. Notice here, no double into this key area. I will look for growth plays on a close above about 221, 222 actually, but that's just for a quick little pop. So we could possibly see some more upside momentum in growth, but it's much more limited than value. We don't have a strong pattern yet there. Okay, so that's where I'm sitting. Yeah, it could be an inverse head and shoulders. This is not a fantastically formed right shoulder either. I'm going to put this out there, and these are counter trend plays. I'd rather play that value pattern than the growth pattern. But here it is. Here it is. Because things can change. Things can change. You know, that 50s overhead would need to get, first to confirm this needs a move above the neckline. I'd be watching for a close above 22, 22, 26 area. Area I'm going to be really watching would be the right-hand part of the left-hand shoulder with the 50, though. We could see a stall out there. That's why this is an aggressive pattern, but there it is. There it is. Should we get some more plays in growth? What is final? Well, I don't know why that is on here. Why? I don't know why. We got Ripple Tether. So that will wrap it up with there. That's where we sit. Keep in mind, we do have that daily double in the Dow. We have had some decent plays. I am cautiously bullish. Term people like to use as a rug pull. I am cognizant of a potential rug pull, but we have some patterns coming in, and we have that daily double. Now, even with that, just a reminder, these are still a long way off from anything in buy mode. Long way off. For long-term buy mode. We could even rally up more before getting anywhere to a longer buy mode. That's where I will leave it. By the way, if you are new here and you like what we do, please do consider subscribing, ringing that bell, and hitting the like button. I will see everyone on the live streams. Thank you for tuning in. Bye for now.